Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about GBPUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite strong historical monthly support and demand area. From here, in fact, all these previous rejections to the upside have been created. And what we can notice at the moment is that the market is testing here this exact same level, has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this area, as already happened in the past every time that the market was testing this exact same zone. So let's keep that in mind and move down on the weekly time frame. Now, from a weekly perspective, the market here has just behaved exactly as we would usually expect in a situation like this. In fact, the pattern that we had was clearly this W formation. And as I explained many times, after the creation of a W, what we could expect is first the completion at the neckline and then the continuation to the upside, which is something that most of the times the market does. And in fact, that is exactly how the market reacted to this pattern, first completing the pattern at the neckline and then continuing to the upside with the completion of this impulse correction and impulse pattern to the upside. So from a weekly standpoint, so far the market has been behaving as you would usually expect in a situation like this. We can also notice that now we have a new impulse to the upside, and after an impulse, the next logical step would be first a correction and then the continuation to the upside, essentially for the market to establish this uptrend from a weekly standpoint, therefore continuing the creation of weekly higher highs and higher lows. So now that the market has created a new higher high, create a higher low, and then yet another higher high. So textbook uptrend from a weekly standpoint. We can also notice that when it comes to the structure, this area is quite strong previous weekly resistance from which all these previous rejections to the downside were created, which is now turned support here. And after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg, which shows us how we have the 0.32 50% and 0.618 Fibonacci retracements lining up exactly with this previous resistance turned support, creating confluence of support at this area that we could in fact expect this market to first test and then potentially to reject to the upside. So the weekly time frame is currently looking quite bullish, especially in the case of a correction to this area, which could bring institutional longing, because instead of a confluence of support where we have multiple layers of support, there is an increased probability of getting institutional longing. But more about institutional longing later on when we move to the commitment of traders. For now, let's keep this in mind and move down on the daily time frame. Now, from a daily perspective, the situation is incredibly similar. We have a strong impulse, and at the moment the market is starting the correction. If we take a Fibonacci from the low to the high of this correction, we can notice how the reversal area would be this one here. So the area in between the 0.32, 50%, 0.618, and 0.786 Fibonacci retracements, which again, if we extend it to the left, we can see how it is also the previous resistance turned support. Therefore, we have confluence of support inside of this area. And as I already explained, inside of a confluence of support area, there is an increased probability of getting institutional longing. So if the market will correct to this area, and we start to see institutional longing that could push this price higher. Now, speaking about institutional longing, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data precisely for the GBP, the first thing that we have to keep in mind is that if we're looking at the data for the GBP, we're actually already looking at GBPUSD because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, there is a massive amount of increasing in the net positions. We went from having a negative net positioning of minus 28.9k net positions with more shorts than longs, 72.6k shorts compared to only 43.6k longs, all the way up to now having a positive net positioning of 84.6k net positions with more longs than shorts, 135.3k longs compared to only 50.6k shorts. So institutions clearly have been moving aggressively to the bullish side for GBPUSD, therefore making it stronger. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily perspective, if the market will now correct to this zone, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4-hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.